November trading tips, navigating volatility and seasonal patterns. As we enter another busy month in the financial markets, it is crucial to be prepared and informed. In this video post, we will discuss the key trading tips for November, taking into account the recent geopolitical events, seasonal patterns, and upcoming risks. Let's dive in. 1. Volatility and geopolitical risks. October proved to be a volatile month for stocks, primarily due to the unforeseen attack on Israel. As we move into November, the conflict in the Middle East continues to intensify, raising concerns about the risk of World War III. With these geopolitical risks, volatility is expected to remain elevated or even increase further. Traders and investors should consider buying gold as a hedge, as well as volatility and put options on the market. 2. Seasonal strength for stocks. Despite the potential for volatility, November historically has been a great month for stocks. In fact, it is the third best month for the S&P 500. However, it is worth noting that December is the hands-down best month for stocks, often referred to as the Santa Claus rally. Therefore, any steep sell-off in November should be seen as a buying opportunity, as wars rarely have a lasting impact on the market. 3. U.S. government shutdown. Another potential risk to watch out for is a U.S. government shutdown. Congress passed a stopgap funding bill in October to keep the government funded until November 17th. If lawmakers fail to pass another spending bill or stopgap measure before that date, a government shutdown could occur. This would lead to a downgrade in the U.S.'s sovereign debt rating and a decline in stocks. However, the ongoing conflicts in Israel and other geopolitical tensions make a government shutdown less likely, as it would also affect military operations. 4. Dollar-yen performance. November has historically been the best performing month for the dollar-yen exchange rate. While this performance largely depends on the actions of the Federal Reserve, it is worth noting that the Bank of Japan is unlikely to stop the yen slide or raise interest rates aggressively. This effectively greenlights the dollar-yen rally. However, it is important to remember that this trend may not continue indefinitely. 5. Central bank meetings. November will see several central bank meetings, but no major policy changes are expected. The Federal Reserve's monetary policy announcement kicks off the month. Given the current economic conditions, including a strong economy, good data, but some softening in the labor market and inflation, it is unlikely that the central bank will risk raising interest rates at this time. The main question is whether the slowdown in job growth and softer inflationary pressures will prompt the Fed to halt tightening. It is anticipated that the Fed will wait until December to make any significant policy changes to guidance when they update their economic projections. 6. Fiscal stimulus from China and Japan. While monetary tightening may not be on the horizon, it is worth watching for possible fiscal stimulus from China and Japan. Any fiscal stimulus measures would be positive for the Chinese yen, Japanese yen, Australian dollar, and New Zealand dollar. Conclusion. As we navigate through November, it is crucial to stay informed about the geopolitical risks, seasonal patterns, and upcoming events that can impact the financial markets. Incorporating fundamentals into your trading strategy is essential for success. Disclaimer: the information provided in this video is for educational purposes only and should not be considered as financial advice. Trading involves risks, and individuals should conduct their own research and seek professional advice before making any investment decisions. As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.